Good afternoon. This is Tom Alexander. It is Sunday, November 20th. It is about 1 p.m. Eastern Time in beautiful Charleston, South Carolina. This is the weekly addendum, video addendum to the written report that you all should have received. If you have not received that report and you'd like to receive that report, send an email to tom@alexandertrading.com and I will send you the written report from this week and put you on the list to receive them going forward. Also, it would be a huge help to me that if you find value in this video and the reports, if you will like and subscribe. And I certainly welcome comments. If you have comments, if you have questions, put them below and I will respond to every single one of them. So I appreciate that. Now, a couple of housekeeping things. We're coming into what is historically the slowest week of the year volume wise. Now, that doesn't mean we won't have some wide range trading. As a matter of fact, as you'll see in a minute, I'm sort of expecting some wide range trading next week. But the light volume will come in at selective times. And what that does, it creates these air pockets. And we've had air pocket trading in the stock index futures, especially intraday now, for since Thursday week ago, since we had the big ramp higher. Since then, we've basically been in an adjusted phase in most of the contracts, especially the financial contracts. So let's take a look at the charts and some things that we want to be paying attention to next week. Okay, here are the primary 4 U.S. trading indices. I have them a little bit out of typical order, but that's okay. Let's just take them one at a time. The message is the same across the board. If you look, we had sort of a wide range, sort of between 40.28 and 39.06. The mini crash low on Thursday. But if you look at the closes in here, 5 of the past 7 days, we've closed in a really narrow range. That is balance. That is indecision. That is digestion of this giant gap up and then follow through in price that occurred from the 9th to the 10th, Thursday week ago. This was an opportunity for the market to break down last Thursday. It absolutely failed in that regard. For those of you that have followed my work for years, this is what appears to be a false breakout trade. A false breakout trade is when the market forms balance and then it attempts to move initiatively or break out of one side of that balance and it fails. And when that occurs, it is probable that you're going to retrace the entire range of that balance in a fraction of time to create it. Now, what that implies in the SPX here is that we'll see new highs pretty quickly next week. That wouldn't be a big surprise. We're in a seasonally positive time of the year, all of that stuff. But the price pattern is what I always default to. We always default to price, and that's what price suggests. Now let's go across and look at the others. Let's look at the Dow. The Dow is the one that's been leading the charge here, but it also has closes in a really narrow range. Now it is, I'm not sure, sort of double closed against the highest close in this rally on Friday. But at a minimum, I would expect to see the Dow trade to a new high. Now, this is important. If the Dow does trade to a new high, it will be important that Friday's lows and all the indices hold. If the Dow trades to a new high, nothing else does, and then we trade below the lows on Friday by all 4 of the indices, it's a sell signal. No equivocation. Okay, let's go to the Russell. The Russell has a wider range than the others, but you still have a series of closes in a fairly narrow range that is indicative of digestion, indecision, and a lack of conviction since Thursday week ago on the part of the big money. NDX is certainly, it really has the narrowest of a cluster of closes. And so all of this points to a wide range move next week. And again, if it looks like the Dow is going to, at a minimum, trade to a new high, it will be important if that happens, that everything else follow through fairly quickly. It will also be critical that if the Dow does trade, not even close, but trades to a new high, and then all four of the indices during the week close below Friday's low, that's a sell signal. It's a sell signal against the most recent top in the respective index that you're trading. But if that does occur, I would expect there to be immediate follow through to the downside. That's not a prediction. That's an observation. That's just price analysis. Okay, let's look at the technical situation. And it's rather interesting also. Now, if you've been following this video for the past few weeks, few months, or whatever, or my work for years, you know I lean very heavily on the relationship between price and breadth. There are times where it can give you a really good read on the market, sometimes not so much. This is one of those times where it's sort of binary. If this rally is going to continue, when we do have intraday pullbacks or day-to-day pullbacks, breadth should not really decline much below negative 1,300 or so, and we should not see another negative 2,000 breadth reading until the end of this rally phase and another bear phase begins of some relative significance. The 10-day and 5-day moving averages of advancing issues are sort of squirrely in here, not giving a lot of useful information. But based on the price pattern at the moment, I would expect to see higher prices, and I would expect that those two will curl up. Price action will determine that. It will take care of itself. Okay, this is maybe the more interesting technical look, and it's VIX. The SPX here, and then this is VIX, the volatility, CBOE volatility index below. And I put this in the report, and I also put in the report another analogy to this particular view back in the 2008 bear market. But if we get down to 20 in VIX, every time we've done that, including and since the high back last December, it's been a very significant top. That's occurred in every single significant rally in this bear market. This bear market has been interesting in that your retracements have been so extraordinarily deep against the previous leg down, and that's certainly occurring now. So if the market is going to continue to rally in a seasonably favorable manner and expectation, we're very likely to see VIX down around this 20 level. And if VIX gets around this 20 level, we'll want to be paying close attention to where price is at that point in time, because that, if we're in a bear market, that should mark the next short-term top. Okay, there are actually other contracts besides stock index futures. So let's take a look at them. And by the way, I run a live trade room, and in that live trade room, we do trade stock index futures every day, but we also look at crude and gold. They're two incredibly great contracts to trade intraday, actually better than the ES, the NQ, any of the stock index futures for a variety of reasons. I will have a seminar soon featuring micro gold and micro crude. They're incredible contracts to trade intraday. If you're beating your head against the ES day after day after day, or the micro ES day after day after day, consider looking at these two contracts, or consider looking at them in addition to the ES. I think you'll be pleasantly surprised. Okay, crude. Crude is dead between important levels. 85.5 to the upside, 76.25 to the downside. Gold broke this trend line that I had been watching and putting in reports for a long time, and it broke it in dramatic fashion. Now, the next downside level that I'd keep an eye on in gold is here. I would be favoring longs in general in gold against this downside level. Let's look at notes. Notes and bonds obviously carry the same pattern, so you can apply this analysis to the bonds if you so choose. This was the Thursday ramp. It is holding. This is an important short-term downside level. Last week's low right here. And then to the upside, you know, you're back into the elevator shaft of the crash off of the high in August. And the dollar, of course. Now, the important level to the upside in the dollar is right here. And then if we take out Friday's low in the dollar, I'd favor short trades and I'd look for lower lows. Guys, have a most wonderful week next week. Reminder, in the U.S., it's Thanksgiving holiday. There will be trade. Trade will get thinner and thinner on less volume as we get deeper into the week. Markets are open on Friday for the 3 people that will be around trading them. I will not be one of them. Hope you found this useful. Have a great week, guys.